Check. Wednesday, May 28th, 2025. Today, as far as news is concerned, we have FOMC meeting minutes coming out a little bit later on. May 28th, 2025. I tell you what, this has been a crazy last couple of weeks. I have had some of the wildest experiences when it's come to trading, when it's come to life, when it's come to everything. It's just, I'm going to tell you, it's dark. It's dark as night outside right now. It's daytime, and I have no sunlight. Normally, I have sunlight coming through this window, but it's dark, and it is 8:25 a.m. here in the central time zone. But yeah, so that's a little bit off-putting. Yesterday, we had a little rainstorm last night, and in the middle of our trading session yesterday, boom, cut out right on us. Hi, power cut out. Stream ended abruptly. So we're back here today. And it seems like we're going to try to do it again. We're going to try to do it again, right? We're going to try to have that exact same experience again. We're not going to let something like um, repeated abject failure stop us from succeeding. We're not going to we're not going to let repeated abject pressing crushing failure stop us from succeeding. And if you're with me, you know what I'm talking about. Let's keep going, right? Right? If you know what I'm talking about, let's keep going. Now we could pop over to the news real quick. And I already told you what we had as far as news is concerned. We just had a little bit of FOMC minutes. That's going to be the minutes from I guess the last FOMC meeting. The long-term interest rates are now notably higher, driven mainly by increased real rates rather than shifts in inflation expectations. While estimates of the longer run neutral policy rate has also risen, Fed Chair Jerome Powell said on Thursday, speaking about the Fed's ongoing review of its policy framework, last updated in 2020. Powell said that the economy has changed a lot since then. He's warned that inflation might become more volatile in the future due to more frequent supply shocks, which could make it harder for central banks to achieve price stability. Throughout his remarks, Powell also stressed the critical role of anchored inflation expectations, which have underpinned several of the longest U.S. economic expansions. He reaffirmed the Fed's strong commitment to its 2% inflation target, noting that without well anchored expectations, the recent disinflation would likely have come at the cost of significant job losses. And that source is the Federal Reserve. Federal Reserve. So that's what we're dealing with. And then those minutes are going to come out today at 2 o'clock. We really kind of waiting with bated breath to see what I didn't want to do that. But we're gonna wait and see what is in store for us later on today, and then we'll just hop right on. So today I'm paper trading because along with all of that volatility, something is going on over at Top Step and Tradeovate. A lot of accounts have been frozen. A lot of new accounts that have been established have not been able to be were not have the ability to be accessed, and my losing streak continues. And the funny thing is, truth be told, I never would have started this channel had I not been profitable and successfully trading. I never would have done it. Then I began to trade, and for some reason, everything that I saw prior to the first day of trading, honestly, sometimes it feels like I just can't see it. Right? The confidence that I had and the strategy and the levels and sort of that patience, sort of that ability just to say, I'm looking long for this bearish order block, right? And I'm seeing it trade to the bearish order block. And I would sit there and I would confirm it, right? Confirming my strategy, confirming all of these things. And then, boom, wow, profitability, boom, wow, past the compound, boom, wow, we're moving forward. And it seems as soon as I grasped certain understandings about the ICT concept, that very thing did not work the next day. or did not work today, or a weekend would come, right? Or I would have a week where I'm just like every day, hitting it every day. I'm hitting, not missing, right? Not me and the market ain't tuned. I see market structure. Market structure speaks to me. Then all of a sudden, ah, right then all of a sudden, um, and I think what it was is I think I was cool until I had jury duty. Once I had jury duty, after that time, I was just out of it. I was out of sorts. Um, because I think it just took me out of the market is open. It just sort of took me out of my natural framework. What I was watching here was this level. So on the 15 minute, there was a level that I was looking at to see whether or not it was going to serve as a bearish marker. We're above both above the Asian session and the London session. And also above yesterday's PM session. We're above yesterday's lunch rate. We're above yesterday's New York session. So the post market and the pre market have been bullish. Um, and so we kind of had this a brief run up. And let's see if I can identify the areas that I'm describing as I'm just saying them out loud. Just break it down to you. So this is the PM session. This is the Asian session. London session broke down. We took out the lows of the Asian session. We took out this low in the PM session from yesterday. After we took out the low in the PM session from yesterday, then we began to rally aggressively in the pre-market around 6, 7 a.m. We pushed very strong to this level. So this was the pre-market high. We ran out that pre-market high. We dropped right back into this level, dropped right back down to the PM session high. And with precision, we just ran directly to it, tapped it. So we see this is the Asian session high. That's the PM session high. And we just bounced and then we bounced, we rallied, dropped back into the 50% of that up close range. I'm watching a 15-minute up close candle right here. But we go to the mean threshold of that level, we bounce up, come back down below that level, bounce up, fall down, bounce up. And so I'm personally, it looks like we're experiencing some form of decay at this point. Um, Now, this is what I don't like about paper trading. What I can't stand about paper trading is this. I can. What do I dislike about paper trading? And I have to be honest about this. I can look at paper trading with this sort of nonchalance. Not the same sort of an effort that I would put forward toward prop firm eval or a funded account. But this sort of nonchalance where I look at the market and it's just candles trading to levels. And then I'll go ahead and I'll just put a trade on, right? I'll go ahead and I'll just be like, oh, okay, I like this spot. You see, you hear the tone of my voice? That's sort of a flat, I like this spot. And then I'll take the trade and then it'll go to profit, right? But that's paper trading. So I'm like paper trading king. Paper trading king. There's nothing a paper trade account can do to escape my accurate eye. You could tell because let's say if I put on a contract here, am I paper trading? I gotta make sure. Yeah, and and when I'm paper trading, I think if I'm accurate about this, if I'm paper trading, I am more likely to take scalps. I'm more likely to scalp when I paper trade, right? It's like if it runs for 300 handles, I wouldn't care in paper trading. I mean, so what, right? And for all you people who are having that exact same experience with paper trading, I'm sorry. I'm sorry. I'm not trying to be a bad example, right? I'm not trying to be a bad example. I'm just trying to tell you my personal experience as how difficult it is to translate paper trading into active live trading. There's a small imbalance in the pre-market here. Just gonna grab that, pull this forward. Weather is really kicking up outside. I'll probably lose the stream, right? I'll probably get kicked because I'm telling you, it's like nighttime outside right now. And I hope wherever you are, you guys are not experiencing some of the terrible weather that we've seen across the country this year. So many people have lost so much in such a short period of time. It's just an unexpected thing that, the sky turns dark, the wind kicks up, and, you know, so I think I'm gonna crack this window real quick so I can see outside, just in case there's something I need to run from. Hold on a second. When I was younger, they used to have they probably still do. And see, this is like one of those areas, right? You see, I hit that level and it's almost rejected like this. One of the things that I saw yesterday, and I was very curious about 15 minute, was I saw a candle like this yesterday that I ignored. And it was a 15-minute candle that hit the consequent encroachment of yesterday's Asian session, and it ran to a level just like this, and it hit the consequent encroachment of the Asian session, but it was a 15-minute candle, and then it pulled back aggressively. And it turned out that that was a very strong signal. And it looked much like this, right? It looked much like this, how it was this down close, and then there was a long wick, and then there was a this and a that. This morning, because we've taken out so much of all of the range to the downside, I want to think of the market as being bullish. I want to, but I I'm really am going to begin to commit to a bias, in ranges. And the reason I don't is because I don't want to be wrong. Right. I don't want to say it out loud and then be wrong. But it makes no difference if I am wrong in the trade, but I didn't say it. It makes no difference, right? So I might as well claim a bias. I might as well have some sort of a belief system around what I think that bias is and just be completely wrong. Like here, I see this and I see this gap and I see us pull up into this range in this area. And I'll put up my little buy limit order. But I did that wrong. I did it because I was in a rush to catch this in this gap, right? To catch that in the gap. But what's my analysis? My analysis, I'll tell you the truth. We are roughly 25% from the weekly high. About 25% from the weekly high. It's 9:38 a.m. We could run out the weekly high and continue to break to the upside. Okay? That's a possibility. What I said yesterday was if we're at the extremities of ranges, if we're at the extremities of ranges, then I would like to be more inclined to trade the return back into the range, if that makes any sense. That's a lower time frame analysis of what I'm looking at. We have just made in that one push at 9:39 a.m. We just equaled the weekly high. So we're breaching the weekly high. Right now we're inside of a new week opening gap, a new week gap. I'm not going to call it opening gap. It's a new week gap, the gap between the weeks. But we're at the consequent encroachment of that level. That level is 21,563.50, and we just breached that level. With that impulse, we breached consequent encroachment of that new week opening gap's consequent encroachment. When it comes to new week opening gaps, I believe the saying is we're watching to see if we trade to and through. This consolidation occurred at the quarter level of that new week opening gap. We traded to the quarter, away from the quarter, through the quarter, below the quarter, now to the 50% level. High of this level is the lunch rate high, or the high of day from Wednesday. Excuse me, the high of day from last Wednesday. We just took out that high. I want to say this is like our third or fourth attempt to break through this level to the upside. It's like our third or fourth attempt to break through this level to the upside. So I don't, you know, what? You guys want to hear me rap? No, you don't. No, you don't. Ah, eyes watered up with a yawn. You know, I'm gonna say this too, which is crazy. Anybody superstitious out there? Sometimes I think when I wear these glasses, I take worse trades. When I wear my blue blocking glasses, right, for my vision, I think there's something that's a little bit uh distorted, like tunnel vision when I put these things on. Like if I'm wearing glasses like this, then it's almost like, reality. And then this is like, oh, I'm playing a game. Excuses? I got a bunch of them. I got them all. Uh, uh, um, and actually, I do prefer to stream my trading. I do prefer it. I do prefer the idea that this isn't happening in uh in a void, in like a silent void. If it were happening in a silent void, then I would literally be sitting here in this room by myself, like staring at these screens, listening to the rain fall on the window. And of course, I would have recorded it anyway. I've recorded my trades for, oh God, how long? Years now. I have like terabytes of video of me sitting in front of charts, going through equities, going through options, trading futures, trading my own personal funds, trading with the prop firm accounts, discovering ICT's concepts, discovering um so yeah, so many other different things, right, that I traded before I got to ICT's concepts. And um maybe that's the confusion that I'm having right now. But yeah, it's just one of these things where I think that, you see how we drop down below this low. What time is it? 9:44. As I was saying, mm, yeah, all it's going to take is some extremely high wind and a few lightning strikes, and I think that's going to be it for the stream for today. Mm, 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 mm. One thing that I am really proud of is, even though I'm paper trading, I am taking this as serious as it. I'm still taking it extremely serious. I'm still taking this extremely seriously, even though I'm just sitting here, I'm going through the motions with the paper trade. It's 9:45 a.m. and I was looking at a lot of different areas where I thought to myself that I could just jump in, right? You jump in and sling something against the wall, see what sticks. But that's not my strategy, and I did not want to practice something that I'm not gonna, as they say, what? That's in reverse. I didn't want to practice something I was not gonna preach is ridiculous. That's not how it works. But exactly, I'm not gonna do something I'm not gonna tell somebody else to do. I'm not going to do something that I would not tell somebody else to do. Right. And I think that the premise of that is there we go. That should be a short right there. You see how we dropped right down and we inverted this gap? That was one lightning strike. That was lightning strike number one. I'm looking at the 1 minute time frame. 5 minute candle is about to close. There's one candle to the downside, one candle to the downside. I had to double back. Right? I had to double back. I said, look, oh, look. But see, that's how manipulation works, right? The manipulation, if this is a manipulation, the manipulation would key you up, like key you up visually for a movement in any particular direction. But the low of this wick is on the high of that down close candle here. So it would be like I would buy stop loss here, and this would be the that I would key in. Um, 2 minutes and 27 seconds left in the 5 minute candle here. Um, yeah, this is not normal trading, right? I'm in the paper trading where they give you like, well, boom. And that's it, right? That's one little loss right there. I get that. I get that. I get that. So trading publicly does have its own extra emotional component, right? Yeah, you have to know that. Trading publicly has its own extra emotional component. The idea that I want to be successful in this trade, and I did say go short right there. Look, but look, the reason I didn't take that is because I literally called that manipulation. I called it manipulation. It wasn't, but I called it manipulation. A short from here to here was not manipulation. Now, the question was taking that high, was that enough to flip price for us? Right? Was that enough to completely flip price? I guess so. I guess so. All right. Well, 26 minutes. 26 minutes. 54, 52, 51. I want to see what happens when this 5 minute candle closes at 49. And I also want to correct something here. Uh, yeah. You know what? No, I'm not gonna do it. That's fine. I don't care. I don't have a great track record, right? I don't have a great track record. So what I wanted to do is, if you guys have never seen how to do this, hit reset. There you go. Now you have this fresh account. Boom. But This was fun when it was set to 10. I would never trade that much in a regular trading account. 3, I think, is reasonable for me. That's a reasonable price point. Okay. Now, on the 5 minute, we have a new 5 minute candle as we drop down into this low. And buy. Let's see. Where's my stop loss? Oh, bring my stop loss at least to the low of this gap. Makes sense, right? And then I'll bring my take profit down to the high of this range. Please modify. I used to have the stuff set to automatic so I could move with speed. But you could do that by going to your settings. Then you would go to instant order placement. Then you could also change your sounds, the play sound with the execution to a chirp, beep, calling. Not sure what that is. Fault. That sounds like. Ugh, that's disgusting. That's the one I'm using now. Oh man. Ugh, you can't even hear it. It's on desktop audio. I have the desktop audio muted. All right, let's try it again. Now that's the bell. That would be fault. Ugh, ugh, hey, ugh. That's kind of cool. Try to play it again. Ugh. What do you think about that? Eh. Okay. This one in chirpy and thin. I'm gonna tell you. I'm gonna tell you. This sound gives me PTSD. You know, it's because it hits your stop loss. It's this sound. I wish there was two different sounds, right? If we had two different sounds, it would be cool. Like when you hit profit, it would be like, and then if you get stopped out, it'd be right. But I guess they do that because they don't want you to be emotional about trading. As if making 5 grand has the same as losing $1,100, right? Oh yeah, same. But I'm moving away from chirpy. I can't do it no more. I think I'm gonna go with hand. No, I don't like that either. That's definitely not it. You made money. You made some money. No, thanks. No, thank you. I think I do. I think I'm gonna go with calling. Notifications. All events, rejection. No, all events, definitely. Mm-mm. And then executions. And there's the buy sell buttons. You can add it or remove. If you have a chart and the only thing you do on that chart is charts particular levels or whatever, yeah, this is actually cool because it stops you from being so confused about um, where you're actually trading from and operating from. I think that's a great idea. And then I think that's enough for now. I'm gonna apply that to all my screens here. Okay, so for now, and this is what I was saying about paper trading. As far as paper trading is concerned, I'm more willing to exit this trade during paper trading. And what's the reason? The reason is because when I paper trade, I give myself more liberty to get in and out of trades, right? So everybody says, and it's not everybody says as if this is this sort of a common misunderstanding or a thing that's misunderstood, which is exactly the same as misunderstanding. But it's that you know taking one trade or looking for a particular entry, looking for a particular trade is more profitable than scalping in and out all day for most people. So, um, when it comes to paper trading, I am more liberal with saying, oh, okay, I'm gonna get in, I'm gonna get out. In my personal anecdotal history, I make bad assumptions that I'm more profitable when I paper trade, and it's actually not true. It's just that I actually feel more open to, oh yeah, of course I'm gonna take a loss while I'm paper trading, right? Not that I'm gambling, but I'm more likely to say, oh no, strategically, I want to see I want to see an entry here, bam, or I want to see this entry there, like right here. First thing I'm thinking as I see these levels is earlier, I would have loved to have gotten short right here for the move down. That's why I marked out the up close candle on the higher time frame. I think it was an hourly candle. Like if I go to the hour chart, excuse me. I don't know what this is then. What is this? What did I mark out? What did I mark? What did I mark? Why did I measure this level? Yes, I measured this 15-minute up close candle. Right. So here's the low of the 15-minute up close candle. Here, we trade to the low of that 15-minute up close candle, which, as I said, was the precise area that I would think to myself to get short at. We move above this candle here, traded back to meet threshold, traded back above, took this level out, and then we dropped all the way back down through this entire area back into this imbalance. Mm, mm, mm. Now we're going to struggle to get back to the lower time frames, but then as we get back to the lower time frame, we just watch the high of this candle touch the low of this up close candle. And why are you still here? And we wait. And we wait. As a matter of fact, this is what I'm going to do. I'm going to exit this trade right here. Boom. What do you think about that sound? You like that? Hello. Excuse me. And the reason I exited the trade was 3 minutes to net to 10. It's 3 minutes to 10. There's a small imbalance. We traded into this imbalance. We're in a discount. Wick to the upside. Mm, mm, mm. In a normal trading account, I would be so nervous to take multiple trades, right? To be known as a person who overtrades. I would not have gotten out of that trade because I didn't want to overtrade. Um, I'll put my stop loss right here. And I'll pull my take profit down here. Do 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 do. I got short right here because I was looking at this imbalance and I pulled it forward mentally and then saw us turn over from the discount and then rally back to the consequent encroachment of that area. Am I right? Historically, I can't tell you that I would be right. If you're trading, if you get into trading, I'm gonna tell you to look. I'm gonna tell you, look, this is this is not really a game. This is not a game. And the thing is I think a lot of traders um enjoy the 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 the, the dual nature of the winning, the losing, the uses of strategy, the the idea of aiming for a target, right? There's targets that we're aiming for, and and no one would call archery gambling, right? However, you aim at a target and you fire like a sniper. But once the bullet leaves the barrel, there are elements that affect its trajectory that you have to account for before you pull the trigger. Right. I do know that we are going to either go up or either go down. Right. Now, the thing that I have a hard time tracking mentally and visually is this weird fluctuating pattern that we see a lot where yes, we are going down. Well, yeah, we are going down and da, 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 da. But there's another pattern that's at work where at 10:30 we'll be here above this smaller time frame high. Then we'll move it in the direction that we thought the price would move into. And for me, it's an extremely difficult process to keep those two things straight. But I did notice how we dropped right back down inside right back to the London session high and closed. We closed on the London session high. We wicked inside the candle and we closed on the London session high. This closed as London session high. Oh goodness. Oh man. Okay, okay. I don't want to, but I didn't want to, but I will. I didn't want to, but I'm gonna do it. This is London session high. We wicked inside of London high. We closed on London session high. Now I'm gonna push this to the upside to here. Why did I do that? Because I just recently began trading these session highs and lows as significant liquidity areas. Where is the consequent encroachment of Asia? The consequent encroachment of the Asian session is in alignment with that London session high. We went down there, we dropped the wick into it, but the bodies did not close below that level. They ran right back up to that confluential area and they closed. Grady, you're going to use that as a signal to switch your bias and buy? Yes, I am. Because I would rather be wrong with that as with that particular market structure signal as my entry than as anything else. Because if I go back through my charts for weeks, most of prices strongest uh, movements, changes, exchanges are occurring at these areas. These are the areas that they're occurring at. And when we began this consolidation back on Tuesday, May 13th, when we began this consolidation, I began to look at the London range, and then just recently begin to incorporate those levels with the intraday ranges. It looks like I'm here for the reversal. Am I here for the reversal? It's fine. Again, this is fine, I'm happy with that. The high of this candle obviously is the Asian session high. So you see, I'm caught between my. We talked about this yesterday. I'm caught in my Dunning-Kruger effect right now, right? So I am caught between the idea that we have the London session high, the Asian session high, and we're literally at 50% between those two levels, which is a decision point, um, which is which is interesting. But using the Asian session and using the London session and incorporating the intraday sessions, the highs, the lows, and the consequent encroachment, yeah, I'm willing to go ahead and swap right here at this level. Now, this level is London session high. We closed here. We came back within very close proximity to it. We ran above Asian session high here and closed. This next level is what? That next level is what? PM session high. I could be backwards. It could be backwards, upside down, or reversed. But because we closed on that London session high, come on, baby. And of course I want to be right. Of course I want to be right. But even if it goes against me, sad part is I'm still right, right? Because the idea of the entry or the idea of the confluential, it's not even a word, but of the confluential area would be where the Asian session, the London session, and the PM session are all in accord. We dropped down and we did not go deep into London. We just popped out. We tapped the high of the Asian session. Come on, come on. It's 10:05 a.m. We're in the macro. All we can do is wait now. All we can do is wait. So this is what I've been seeing in back testing. And it plays out like this more regularly than you would know, right? More regularly than you know. Go back through your back testing. Look at your Asian session highs, lows, and the consequent encroachment. Look at those levels in relationship to the London session open, the London session high, low, and close, right? Not the high, low, and close. The London session high, consequent encroachment, and close. Then we go into the open, right, at 9:30. You will see that after the open at 9:30, if we're in close proximity to those levels, then we trade to or through those levels on our way to that daily zone. However, today what we did was what? We opened, we ran high, then we dropped back into Asia and London. We're still above consequent encroachment of the Asian session, which is also the high of London. Looks like I'm on the wrong side this time. Yep, looks like I'm on the wrong side this time. Okay, so now we're in the body of this down close candle on the 15-second time frame. We just tapped it. We bounced back up into close proximity to our entry. Let's see if price just goes ahead and falls or whether or not we respect the we respect this area and then move higher. What I should do is I should drop a grade between these two levels. 2 minutes and 33 seconds left. Mhm. Come on. Come on. Okay. This consolidation at this area is hilarious to me. That I think that's just so funny. That consolidation right there at that point is hilarious. Um, a lot of times I I really want to avoid having to sit through the opening decision of an entry because it's almost like one of those things where um it's it's just the thing that you really want to avoid, right? You really want to take your entry and then you want to see price run in your favor immediately, right? And to get away from that zone. That way, you can reduce risk. You can get yourself to at least break even at a decent point. At a decent point. Are we going to roll into consolidation this morning? Is the next question that I have. We are at Asian session high again. Next red line I have marked out is the PM session high. And all of these levels are in very tight proximity. It's coming down outside right now here, right in this KD area right now. It is a little bit more light coming through my window, although it's completely grayed out. And yeah, we finally got some rain. It has been warm finally. It has been warm. Normally in Texas, we go directly from winter directly into summer with maybe like 2 or 3 weeks of this really great weather where everybody wants to be out and about. This year that time frame has been extended. Kind of like this trade. Yeah, kind of like this trade. 33 seconds left in this 5 minute candle. Now, everything that I said before about, being bullish off these highs, now I'm starting to really reconsider what all of that was about. Now I'm starting to reconsider. Well, what was that about? Like it just held here right above this level to what? To the end of the macro, right? So we held here to the end of the macro before we made the move to the downside. That's not nice, right? Especially not with this little manipulative rally to the upside right before we collapsed. But again, this is the trade that I would want to take on a regular basis. In and out in either direction. But just at this area where boom, boom, boom. You see this? Up above, PM session and Asian session. Below. Close. Back to the Asian session, but we did not touch the PM session again. Then we drop lower. This level is the thing that has me. This is the level that owns me right now because we closed at that level and we rejected so strongly. Uh, even well, here and there and there and there and there. Almost to me, like Price was saying that I don't want to go back down there. That we touched the London session and then it just like nope, I don't want to go. I don't want to go down there. Is it talking to me today? Right? Is the market talking to me? Right? Are we speaking the same language? That's what we need to know because the market is always speaking to us. It's always communicating to us, but are we speaking the same language? Right? Because if the market is, well, the market's language never changes. Our language changes. So if that's the case, then, excuse me, let's see what happens. Oh, am I looking at this upside down and reversed? Yeah. According to this 5 minute chart, I'm on the wrong side. The wick of this candle went up to the high of that candle, and then we turned over. Then we dropped in. Yep. There was no opportunity on the 5 to run into this imbalance up above. I guess that's a balanced price range. All right, so I guess we kind of balanced all of that out. Then we turned over and dropped back in. On the lower time frame, this area right here, as we traded into this zone, we traded up, then we drop, breakaway. Um, what's next? Institutional order flow entry drill, and then we drop down to here. Well, then we took the low out, traded back in. Now we're back to break even. And after all of the pricing down into the low of this level, this seems like one of those areas that's screaming, "Hey, Grady, get out." So what would be the logical thing to do right now? This is the logical thing. All right. If you're losing confidence in your trade and you've had the ability to sit in a trade this long, sometimes you don't get this chance, right? You don't get a chance to practice this part. You're sitting in a trade this long. Sometimes you have one here. Sometimes you could sell one and you completely reduce your risk. You reduce your risk by a little bit, right? So instead of me being out $1,100, I'll be out 950. And being out 950 is better than being out 1100. Penny saved is a penny earned. I made that up. I made that up. Um, yep, yep. Like I also made up fair value spaces. I'm not gonna say that. I will say it. I will say this. And what I wanted to say was, and this has nothing to do with trader, because I'm a little superstitious when it comes to this, when it comes to trading. But one of the things that I found was interesting, and I don't know if you've ever done this. Have you ever had a prime, just a prime trade, but it sits in like in a range like this, and it kind of goes back and forth. You have you charted it out, and you have this conviction that's unbelievable. You enter with leverage, right? Probably more leverage than you normally would. But you enter it and you enter it confidently and you have a great stop loss. But it just goes back and forth, back and forth, back and forth, back and forth, back and forth until you purchase profit with the trade. This is not a real thing, right? This is all psychological. But I call it purchasing profit. See how I had three contracts on this? For me, soon as I gave one contract back and reduced my ability to have a larger profit, then price came back in my favor as soon as I reduced the ability. So if I had like 20 contracts, right? If I had loaded up 20 contracts, it would be against me for a period of time. I reduced that down to five contracts, it goes in my favor. I would say to myself, yeah, but if I would have had 20 contracts on, this would be I would have made 10 times more money, right? Like this is crazy. But yeah, yeah, I call it purchasing profit. It's not taking profit. It's reducing risk to one side. And when you reduce the risk to one side, then it runs in your favor. And it's the same uh if I came to 21,480 and then I kill the trade, right? I'm out. 21,180. If I had done that here, by now, if I wasn't in the trade, we would be here. We would be at 21,595. It's all psychological. It's not true. It's not true. So don't you think that, right? Don't use superstition in trading as a trading methodology. It's not true. And we'll see that right here, right? But Grady, I thought you said that's my point. That is my point. My point is that you have to use when it comes to gambling, when you're a gambler, yeah, you can use superstition, right? Like always blowing the dice or whatever it is. When you come to trading, there's no superstition that's going to cause you to be profitable. It's only going to be proper risk management and using a strategy that's consistent over a period of time. So right now, we recognize that in the pre-market, we ran above our PM session high from yesterday, our Asian session high, and the low of this candle represents the London session high. This represents the London session high. Now, when we rejected London and we popped back up, we bought in after we rejected that London. But however, we never penetrated the PM session high again. We just ran back to the Asian session. We retested the Asian session multiple times. Now, let's see how far up this range goes. Let's see how far we go. We're back to our entry again. After we came back and retested the London session high one more time. Go back through all of your consolidations. When you go back through all your consolidations, you'll see, oh, through my consolidation, we have a tight range of Asian sessions and London sessions. And this is all we're doing. We're just going back and forth between the consequent encroachment, the high, and the low of multiple sessions in that range, just back and forth. Now, this level here almost appears to be a breakout of that range, but we'll go to the higher time frame, maybe like a 2 hour chart should be enough. But we're not quite out of this range that we've been operating through. We just came to the high, we reached the high of that level, and then we turned over and we dropped back in. When we dropped back in, we came very close to running down through the London session, right? But this looks just like what? Just like a slight pullback. Boom. Well, what about this imbalance below this area? I didn't really notice that on the 2 hour. I didn't look at the 2 hour. Probably should have. This is where we are on the 1 hour. I was looking at this low and this low. Now we're in the imbalance between the low and this high. Between this low, and I'm sure you can see it, between that low and that high. So there's a small imbalance here. We drop down on the hourly time frame. So we're still consolidating down this range. So remember, this white line represents the London session high. And as you can see, at the end of the last hour, we traded down into London session, rejected it, and on the hourly time frame, we closed. So I'm saying, okay, all right. I see we're inside the wicks of these down closed candles, right? That we may see a move back to the upside. So that's what we're waiting for right now. We're waiting to see whether or not that analysis is a proper analysis of price, time and price. But it just takes some time. It takes a little bit of time. And I don't necessarily want to become emotional about trades as much as I, you know, deal with uh this part. Ooh, I can't stand waiting. I don't like to wait. I am very impatient. And I don't like to wait. I want to see price go to my profit or stop loss immediately. But no, it seems like we're declining. We're inside London again. We're inside London one more time. How much time do we have left in the hour? We have let's see, 3 minutes left in this 5 minute candle. Because it's an hourly time frame, and we have 38 minutes left in it. Yeah, we could see all types of lower prices. Winner, winner, chicken dinner. Okay, that's 59 minutes and 45 seconds of us trading in the market today. Because we made this dip down to the London session and we took out those other levels. Now we're at consequent encroachment of London. We could probably see us continue to penetrate um and breach these levels. We're okay. And the crazy thing is that the Asian session low and the London session consequent encroachment are confluential again today. And now go back and look at your charts. Go back and look at your charts. And when you go back and look at your charts, you'll also see even here on the 5 minute that we have this imbalance here, here. Pull it forward, boom. Consequent encroachment of that gap. Wick down, touched it, turned over, and popped up. If this goes in my favor after stopping me out, I take this as a win. If we hit this level, the consequent encroachment of the London session, that is the exact same price as the Asian session low, I'm going to take this as a win. But Grady, your P&L, look, let's not talk about facts, right? Let's not talk about facts. For those of us who are still working toward profitability, we have to accept as a win when we use proper risk management, when we don't get tilted, when we shut it down for the day, and also when we begin to see consistency in the strategy outside of our ability to properly trade it, right? If we can see consistency in our strategy outside of our ability to properly trade it, then we know all we need to do is trust the strategy and stick with it. Come on. Excuse me. And then I can bring back the entry, the executions. All right. So I was long right here. So yeah. So if we take these levels out and we continue to move higher from this point, that would be excellent. This white line is again the London session high. We ran to the consequent encroachment of the London session, the low of the Asian session, bounced from those areas and popped right back up. I may stop the stream and continue to record this so I can watch it and and fast forward it or something like that. Watch it in double speed. And the reason I would watch it in double speed is because I believe that there is almost like a rhythm to it. I believe that there really is a rhythm to it. And the reason I believe that is because when I watch ICT trade, he has an expectation, and his expectation is based on repeated levels that price would trade to. Traded back above London session high. We have a wick directly to London session high. Let's see if we reject it or let's see if we fall through it. We're down through it. It is what it is. It is what it is. And the importance for me is not whether or not I am correct about the bias or direction right now. Because if you guys are struggling to find direction or bias, it's more important for you to know I would rather wait until price is at a particular level, right? Because if you wait till price is at so a trader said this, and I asked myself this question one time. I said, if it's 50-50, right? If it's 50-50, right? Why is it most traders aren't profitable? Because you would imagine that if you just said every time I trade, I'm going long every time, right? You would say to yourself, well, if you got stopped out half of the time, then that's 1 R. If you were profitable half the time, then that's like 3-to-1 R, right? So then you'd be up 2 R. And if you just did that every day, it wouldn't be a problem. Why aren't more people profitable? The reason more people aren't profitable or is because we're they're not taking that trade in an area where there's confluence. And I'll include myself, we're trading in some middle range like this between running to the consequent encroachment of the London session and running to the high of the Asian session. We're between these two levels. So when price decides, yes, I am moving forward, we don't understand that it's moving forward to like touch the Asian session high. And once it touches the Asian session high, then it's ready to reverse. If we wait till it gets to the Asian session high, then it becomes 50-50. At any other point, you may accidentally catch a pullback for a few handles and go into profit. But odds are it's going to go in your favor for a short period of time, turn against you and stop you out. So that was 100%. It wasn't 50-50. It literally went the direction you thought it was going to go. Bing. And it also went against you. Bing. That's 100%. That's also bad math. So don't try it in class. I think I'm done trading for today for today. And I just wanted to bring attention to PM session high from yesterday. That's Tuesday's PM session high. And just look and watch how price behaves at this level. To it, uh, uh, closed below it, ran back into it, dropped lower on the up close candle to the high, touched the high, higher, touched the high, through, closed, through. So there were this entire area is something that, this is what you take a snapshot of. Right? These are the snap. Oh no, thank you, no thank you. That was an accident. I was trying to do Control Shift S to do the copy to the clipboard. It's Control Shift S if you don't know how to take clips of your charts, just quickly Control Shift S. That should help you out. And yeah, I'm done for today. I know I have a lot of other things to do today. Um, was that a market structure shift? No, no, those just to run above into this up close candle. Then we drop back in. It's just this type of price action. Sometimes that confuses me. Up, down, up, lower, higher, lower, right? And so what I was noticing is that Here, here we did not close below that low. Remember, this is consequent encroachment of London session. So price is fading, but it's also being held. Maybe we're waiting for news. Possibility. It's a possibility that we're gonna hover, consolidate, and not make any real um explosive movement in any direction till the PM session, like later today, in order for us to be in alignment with the FOMC news. And I really want to do, and I've not struggled, but I've really mulled over in my mind, um, sharing some of the information that I've discovered since I started trading with people who are being newly introduced to trading. So when we say FOMC, a lot of people don't understand how um, how dynamic the financial markets are, how many players that are really involved. And I say players, but there are even shadow players like shadow banks and dark pools, and there are entities and organizations that aren't visible to the retail trader, um, that influence the markets or influence price or influence business or influence policies, that we participate in, right? But there are those organizations that are highly visible that have a strategic role and a fundamental part to play in our financial markets. So, uh, for uh, for you guys, one of the things that I did want to talk about was the FOMC and the I believe it's the Federal Open Markets Commission or Committee, um, and how they have regional banks, regional Federal Reserve banks, and how they work together as a team to promote um, stable price and stable markets for business, and stable employment, whether that number is high or low. And so, from that perspective, it should help us all understand our role as income earners or business owners in the greater scheme of things, because sometimes we think that the financial market would only be um, strong if all of us are getting rich, right? And sometimes um, it's overheated, right? Sometimes they say that it's overheated. Sometimes they say that it is too cool or it's cooling off, which could be a slowing or stagnation of the markets or of the business market, not of the stock market, but of the financial markets. So yeah, I was just thinking to myself, what, I should just start coming up with or studying some of this information, because for a new trader, you're going to have non-farm payroll, you're going to have FOMC, they're going to be FOMC meeting minutes, there's going to be Jackson Hole events, there's going to be um, Black Swan events. There's going to be so many things that's going to affect what you see on the chart. And then let's say, and we all like to be positive. Let's say you become extremely successful with trading, right? I mean, you're sitting down in front of the market every day, and you're taking your daily bread, and with that daily bread, you're running to the bank. What are you going to do then, right? Because that's the beginning of a completely new problem that all of us are going to face. And I'll say that in the affirmative, because I believe that if you guys are working as hard as I am, we're going to be successful at this if we don't quit, right? Um, but it's nothing about it is easy, because um, many of the ingredients that goes into baking this type of a cake are hidden from us. So yeah, I've kind of extended this video out just a little bit, this stream out just a little bit with that. But remember, you cannot bake a cake without heat, right? And so the old saying is, if you can't stand the heat, then you have to get out of the kitchen. So that's what we're doing here. We're enduring the heat of this process so that we can really rise to the occasion, right? For some reason, I have a baking, I have this baking thing going on right now. Okay, so thank you guys for. Hey, what are you doing? Hey, what are you doing? Thank you guys for joining us today. Appreciate you being involved. Uh, and hope you guys enjoy this live stream. Just gonna hit you guys with the disclaimer, right? Disclaimer. Many of the activities that I have, especially in the simulated account, is going to be for your enjoyment, your entertainment, and hopefully for your education. Today we covered different topics: how to use TradingView, how to adjust the chirps, how to adjust your entries, exits, and some of the things that you should look for while making your own entries. However, copying these trades are not individual financial advice. I'm not a financial advisor trying to tell you how to use your money, but that you should be educated on how to use your money. I hope you guys liked it today. Join us tomorrow. Please, please, please like and subscribe, and we'll see you. I am Grady on the charts. Bye bye.